Hello and welcome back to the Rekt Capital channel, and welcome to today's video market update. We're going to be focusing on my perspective on the macro view. How should we look at Bitcoin in terms of its historical price tendencies after the halving, each and every halving? How should we think about Bitcoin in terms of the retrace opportunities that could potentially happen down the line? And how should we think about Bitcoin in the next few months going forward until the end of 2020? This video is going to be based on an article that I wrote most recently, and this article was sponsored by PrimeXBT. Let's dive right into the article right over here, because Bitcoin has been making incredible strides over the past few weeks. And we're going to be focusing on these historic events on the weekly and the monthly. So let's dive into the weekly close right over here. The most important thing to bear in mind is this red order block, this historical supply zone that has been dating all the way back really to mid-December 2017, even late November 2017. This is the historical supply region that has been pressing on price. It's been weighing down on Bitcoin's price action and rejecting it every time we'd see even FOMO past this resistance. So over here we saw a rejection. Here we saw a lot of FOMOers get trapped before getting rejected and actually being trapped in their positions and losing money. On these two occasions, this is the first time that we've been able to close on the weekly above this historical supply zone, and this week we're actually pulling back into this previous supply zone to turn it into a new demand zone. So as long as Bitcoin's able to weekly close this week above this historical supply zone, we're going to be able to establish a new base at this region and springboard to higher price levels. So that's a very historic weekly close, but this week we could actually see a historic retest attempt. That's something to bear in mind going forward. And of course, guys, if you'd like to read this article in a bit more detail, it's in the description down below. Check it out at your leisure, because there's a lot of cool details there talking about how we'll be able to retest 12,000 to 12,300 resistance should that retest be successful. So a successful retest attempt over here will lead us to the next region of resistance, which is 12,300, and a break of that will lead to a price of 13,000. But let's dive into history again, a history-making monthly close, because for the first time in almost 1,000 days, Bitcoin was able to monthly close above 10,800. And here's a very similar situation, just a different time frame. Same situation, different time frame, because we saw a monthly close above a key level and now a pullback into this level just to turn it into a support. So what's happening on the weekly is analogous to what's happening on the monthly, just with a different time frame and a different price level. But in any case, this 10,800 region hasn't been claimed as a support in since mid-December 2017. You'll see that this was claimed as a support on the weekly, but on the monthly, it just looks like we just blasted through two new all-time highs. So this is a historic event going on right now, and it's fantastic to see. And that is just essentially a case of bargain buyers who bought early in the cycle, not selling. They're holding, they're not selling. The hodl mentality is strong in this bull market. So FOMOers are coming into the market, they're buying in, they're rushing to buy Bitcoin, while hodlers are simply hodling. And hodling plus FOMO, that's what bull markets are made of. So that's fantastic. And of course, Bitcoin confirmed a new bull market the moment it closed above 10,800. So the whole case here is what could potentially happen next. And the way to think about this is, let's just establish two very simple parameters. 10,800 being this level right over here, the monthly level on the monthly chart, and 15,500, which is the top of this range essentially. This is a monthly range in which Bitcoin is finding itself, and it's just trying to retest the bottom of this range as a support before springboarding higher. But the ascent to 15,500 isn't going to be as smooth as we'd like to think, because there are still a few resistances, and these resistances here, well, they're quite clear right over here. If we just focus on this chart, we have a few resistances at 12,300, then 13,000, and around 14,000 as well. So there are quite a few resistances on the way to 15,500, but as long as we're able to claim that level of 11,400 to 11,600 as a new support, will dive back into 12,000, 12,300 to challenge for 13,000. So lots to get excited about. So far, so good. But let's talk about what could potentially happen if we actually reject. Because of course, Bitcoin hasn't fully overextended itself on this latest rally, because as you can see, it's broken the multi-year trendline resistance. So we shouldn't be talking about retrace opportunities just yet, especially since Ethereum has just broken out, and Ethereum actually tends to lag behind Bitcoin, but for the first time in quite a while, Ethereum is actually leading the market. So Bitcoin could still follow suit and follow Bitcoin, or at least Ethereum's breakout. So Bitcoin hasn't fully overextended on this rally, and you can see how a new trend has formed over here. But if we think about retrace opportunities, one of the areas is this region. So breaking out from this multi-year triangle and pulling back just to this blue diagonal resistance to claim it as a new support. And this region right over here is 9,100. And of course, we can allow for downward wicks past this level to as far as 8,500. That would be a very healthy correction, as long as we close on a weekly above this blue diagonal. But of course, we'd be very lucky to have that sort of retrace. But that price region of 9,000, that psychological price region, is quite interesting to us because it also ties in with some historical price tendencies that Bitcoin tends to show after the halving. And this was covered in an article a few weeks back. But in any case, what we tend to see after the halving is two things. We tend to see consolidation within a range, so check, we've got that after halving 3, and then we see a breakout from this range, because essentially this range is a period of reaccumulation for buyers. So after the initial uptrend over here, we have a period of reaccumulation. This period lasted 10 weeks after the halving, but 13 weeks overall. This range overall is 13 weeks old, but 10 of those weeks came after the halving. So a period of reaccumulation happens over here. People who missed out on the rally, sold, whatever the case may be, have an opportunity to reinvest in this period, and then we see a breakout. But as history suggests, every time we've seen a post-halving range breakout, we've always seen price retrace towards the range high of that post-halving range for a retest attempt before springboarding higher. And that's essentially what I talk about in this piece of the article. That's essentially the nutshell. And just talking about 9,650 being the range high, that's also slightly confluent with the 9,000 region over here. So there is a lot of confluence between these two macro approaches. So those retrace opportunities, depending on where we top out, of course, because we won't be able to reach 9,000 if we rally towards 18,000, for example, although anything is possible in crypto. But at this stage, it's still important to watch out for targets for Bitcoin, because this rally hasn't fully overextended. But on the retrace, we'll have to keep those perspectives in mind. The long-standing multi-year downtrending resistance turning into a new support potentially, but also the post-halving historical tendencies of returning to that range high, in this case being 9,650. Things to bear in mind going forward. But speaking of going forward, Bitcoin is still on track for a new all-time high in 2021. You can see that this is the 4-year cycle, and essentially speaking, candle number 4, as candle number 4 needs to do, is it needs to close on the 12-month time frame above the peak, the high of candle number 1. And of course, candle number 1 is the euphoric candle, the candle that has reached new all-time highs each time, right over here and over here. And if we see this candle number 4, which is essentially a candle of recovery, so briefly speaking, candle number 1, euphoria, this is the corrective period in candle number 2, bottoming out period in candle number 3, and recovery period, which needs to close above the high of the euphoric candle before we can see yet another euphoric candle. So as long as Bitcoin is able to close above 14,300 on the 12-month time frame, later this year we'll see another euphoric candle, and we'll see a new all-time high in 2021 as per the 4-year cycle, because we saw one 4-year cycle already. We're just finishing up this 4-year cycle, so it will be interesting to see how candle number 1 forms later in the year, or at least at the very beginning of 2021, to kickstart yet another 4-year cycle for Bitcoin. Exciting stuff going forward. But what I want to finish this episode off on is that Bitcoin holders have been profitable for most of Bitcoin's price history. If you think about the number of days that was profitable to hold Bitcoin, we have 3,595 days out of a total of 3,647 days. So it's just interesting to see how a cumulative number of 50 days, roughly speaking, this is the total amount of time that Bitcoin holders would be not profitable to hold Bitcoin. So for 98.6% of Bitcoin's history, it's been profitable to hold Bitcoin. That's something very interesting because most people think of Bitcoin as a risky asset class. And of course it is. It is a high risk, volatile asset. But that doesn't change the fact that for most of its history, almost 100%, remember guys, 98%, almost 99% really, 99% of Bitcoin's price history, it's been profitable to hold Bitcoin for most of its history. And that's something that we need to bear in mind when we think of Bitcoin in this bull market and whenever we hesitate to buy on a dip, because history suggests to us that it's always a favorable opportunity to just buy the dip, reaccumulate in periods of consolidation, and just hold for new highs. That being said, thank you so much for watching. If you want to check this article out, check out the link in the description down below. Please consider dropping a like if you enjoyed the video, and of course subscribe to the channel for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.